The political demise of the worldwide system is really starting to rot away further. And that usually is based on trust. And the monetary system is based on trust. So as you lose trust in the political structure, continue to lose trust in the monetary structure, and you go into what you do trust. Gold and silver have been trusted forever. Now,
You're watching CapitalCosm. My name is Danny. It is July 23rd, 2025, and my guest today is none other than David Morgan. Dave, thank you so much for coming back on the show, my friend.
Danny, it's good to be back. Thank you.
Yeah, we were just chatting it up, but let's get some of this good stuff on video here. Dave, considering everything that's going on, we have a big silver move ongoing now. Precious metals are on the rise, and you were just telling me you just got back from the money show, and it's still largely like this generic pitch, to investing in the S&P 500. There's still very little enthusiasm when it comes to the metals, which to me sounds like good news, right? Because it tells us that we're starting to get somewhere. You did hear some chatter about it, but it wasn't overwhelming. Correct me if I'm wrong. But that kind of tells me that we're still fairly early in this play, despite the fact that gold's made new all-time highs. Silver is just about to break $40. We'll see what happens. But Dave, go ahead and take it away. What do you think should be on the radar screen for precious metals investors and investors in general?
All right, wait. There's a little bit to unpack. First of all, I'll comment on the money show, and then we'll come back to the metals.
Sure.
Specifically. So I've been in the money show, I'm not sure, at least a dozen times, over the 25 years that I've been on the internet. But and they always have a little slice for precious metals, but it's not the main theme, as you said, Danny. It's, hey, if you just put your money in the stock market and do, the S&P 500, you outperform a lot of money managers, you outperform some of the mutual funds, and it's a good story. But that's the main theme. But this time, having been there so many times, I'd say there was a little bit more interest in the precious metals than I've seen previously. And the finale was a 4-person panel. I was one of the 4, and it covered 4 topics. It covered AI, crypto, foreign exchange, and precious metals. And between the 4 of us, the guy to my right, who was more AI, he mentioned he was very favorable to gold, and also said some kind words about silver. Obviously, you know what I talked about. And the crypto guy was almost a maxi. The foreign exchange guy, I felt a little bit bad for him because it didn't seem like there was much interest. So between the 4 of us, it was obvious that the main interest from the audience was between crypto and precious metals. So that I found to be rather interesting because I can't recall any in my previous visits to the money show where I was one of the last, I was on the final forum, you might say, and the interest level was pretty high. So that was a good sign. Going back to your second part of your question, the metals have just been finally, I won't say, well, I'll say finally, in my time frame, finally. So I was a little bit concerned that gold had taken off on its own. And I wanted confirmation, just like the Dow theory. I wanted a confirmation that the industrials are being confirmed by the utilities and the transports. And we've got that because silver, platinum, palladium are all moving up now. In fact, gold's kind of treading water, which is what I predicted in my April newsletter. I said gold's made its run for a while, probably going to be in a trading range all summer, perhaps longer. And so far, that's true. And now would be the time to consider moving some gold into platinum, or perhaps increasing your silver position, which I assume most of my people are pretty silver heavy. But the trade was to do that ratio trade, or new money coming into the white metals, and that's proven to be very, very timely. I think that we're probably going to get a pause here for everybody, meaning all, the white metals and gold. but maybe not. It's a very difficult market to analyze because there's a bifurcation between the retail side of silver, which is really full of product, and the industrial side, the commercial side, the paper side, the derivative side, that's very tight. And that's what moves the market. It's the commercial bar side, it's the derivatives, it's the contracts that actually move the market. Not that the physical market won't take over, and it does, but it's the big players, those thousands of contracts every day. And that's very interesting because, as you probably know, the SLV basically can't borrow shares to short anymore. So the market is very, very interesting at this point.
So you mentioned the ratio between gold and silver favoring silver right now, or favoring gold. But if you're an investor looking to allocate between the two, it would, if you're on the basis of the ratio analysis, you would probably pick silver. Now, you mentioned white metals. Well, one of the white metals we know of is obviously silver, but the other one is less talked about, and that is platinum. How does how do you see uh, from a relative performance standpoint platinum compared to silver? Which one do you anticipate having greater asymmetry from here on out?
That's a very tough one, but I'll let the market help me with the answer. So a ratio that no one ever talks about. I think no one's ever talked about this. Maybe someone has. No, there's someone that did actually, but it's the silver platinum ratio.
Hmm.
And based on the silver platinum ratio, you'd want to sell silver and buy platinum. So on that basis, I'd say perhaps platinum suggests that it has more to go than silver. My gut says differently. I'd say silver probably will outperform platinum from here. But if you were, let's say, overloaded silver and you're tired of it and you're not diversified, if you swapped silver for platinum, you would be buying it cheaply. You'd be buying platinum cheaply because of that ratio. Now, remember that platinum sold at a premium to gold almost always. And then it just got in the situation where it sold below the price of gold. And then it just continued on that for years. And I started building a platinum position well over a year ago because at my age, and I don't want to make any big mistakes, probably had a good silver position. Gold was pretty good. And platinum was at about under $1,000 or thereabouts. And I know the cost of production everywhere is about 1,200. So it's selling at a 20% discount to production. So I'm a better platinum miner than the South Africans because I'm stockpiling my platinum for 1,000 and it costs them 20% more, 1,200. So I started building a platinum position and we wrote about it early in the Morgan report. And the reason I did it was the risk was so low. I'm buying it below cost of production. So my chances for it to go much lower are pretty small. And that's really was my thinking. So I just started to do it. And then, as I just said, excuse me, it caught a bid. It's extremely small market. You think silver is a small market. Platinum is ridiculously small. Why it's even in the futures markets, I've never really understood. But take that, I digress. But so it's done really well. It's actually outperformed everybody this year so far. Platinum's up about 50%. And so it's not for everybody. There are, I'll just say it straight into the camera because it's important to know, there's pretty good slippage in platinum because it's such a small market. So going in, you're going to pay a pretty high premium over the spot price. And going out, you're probably going to have to discount that. So that 50% I just mentioned, net, might be 44%. You might have to eat it on both sides. But that wouldn't, that would not dissuade me from making the trade. Obviously, I've done it because, if you're right, you can, you do well. And also, if you just know the rules of the game ahead of time, that, hey, there's a bigger premium on both sides of the platinum market that there is in gold, and you factor that into your thinking, then you're not all upset by it by the time you go to sell for the first time. You're like, what? I bet it, there's a bigger spread on platinum. That, you're much better off. I love the expression chance favors the prepared mind. If you go into a trade ahead of time, not that you can predict the future, but you know all the parameters of the game. You know every nuance of the game. You know that. You have a lot more confidence because you know going in, okay, that's the way it's played. Going out, okay, that's the way it's played. And you're very satisfied that, hey, we did good.
You did say that your gut tells you silver will most likely outperform. Is that because silver has a better risk reward ratio attached to it because of the slippage that you just talked about?
So there's several things. Point number one is the historic gold silver ratio. So just to go back to like 40-1, silver would outperform gold by over double right now. Secondly, the market's much bigger knowledge base. In other words, someone that's brand new to the metals, let's say someone's been a stock market investor, they're at the money show, their portfolio really hasn't done much. It's kind of going sideways. And they hear, someone at the conference, and may have been Albert Liu, who was with me, might have been some of the other precious metals guys. And it makes sense. I want to put 5% into the metals. So they're going to look at gold, they're going to look at silver. And I say, gold is really kind of at an all-time high, but silver is really undervalued. So I think there's a lot of factors lining up for silver that it's easy to access. I mean, you call up a coin dealer anywhere in the States and say you want to buy platinum, probably 90% of them are going to say, well, we don't deal in platinum, or give me a couple of weeks, let me find it for you. But silver, they're going to have ready access to it. Or if they don't have it, they're going to be able to get it pretty quickly, especially right now with the retail side being so flush with product right now. So I just think there's more knowledge about it, easier access. It's the best known. And so because of all those factors and the squeeze, I mean, if we could, get in a situation where silver starts to make the news because, XYZ manufacturing just put a big order in for silver and they were told they cannot get it delivered for 4 weeks or for 8 weeks or whatever the case may be, and that hits the financial press, people are likely to pay attention and start coming in. So my gut really is, but Danny, as you well know, you know me pretty well at this point. It's hard for me not to be biased. I am, but still, I'm trying to be as objective as I can. If I had to put a bet on it, I'd probably go with some.
Yeah. Well, you've been in the game much longer than I have, maybe even longer than I've been alive for all I know. But so I mean, your insights are very well taken here. We call silver a hybrid, right? It's an industrial metal, but it's also a precious metal. Gold is mainly a precious metal. Platinum, is it the kind of the same split between the two, where it's both a precious metal and an industrial metal, or like compared to silver, how much of it is more industrial than not?
Yeah, I would say yes and no. I love those kind of answers. Yes, it's a hybrid metal. Or actually, yes, it is a monetary metal, but no one really knows that. I mean, unless you're studying from the Austrian school or a metal's head, platinum really has never taken any real merit as a monetary metal. However, if you look at the classic definition of money, it checks all the boxes. So it's primarily industrial. But what moves the market, again, as we all know, is the margin. Where is the demand coming from that's starting to push the price higher? Well, if industrial is steady state, it's the same every year. It's not, but let's just say pretty much it is. Then where's the added demand coming from? Well, that's investment demand. Is that monetary demand? I'll just call it investment demand. But that investment demand is pushing it higher and higher. And jewelry, a lot of the Asian countries don't really know, excuse me, a lot of North America doesn't know that the Asian countries look at jewelry differently than we do in the West. A lot of Asian countries look at jewelry as jewelry and a savings plan. They're buying gold by weight, they're buying platinum by weight, and they're buying it as a bracelet or a necklace or earrings or a ring, but to have it and enjoy it, but they also look at it as a savings. So the cost markup in the Asian markets is much less than you have in the United States or Canada. And because of that fact, I mean, you go into Dubai, I mean, you're buying it pretty much by weight. So you're getting the artwork almost for free. There is a margin. but it's a different market and it's a different perception of the market. So the Chinese have been buying platinum as their favorite jewelry. I'm not saying it's taking over the gold market, but many have moved to platinum because it is 15 times rarer than gold and it's a lot cheaper than gold. So you've seen kind of a shift into not only investment demand, but fairly a noticeable increase in jewelry. I don't want to make a bigger case out of it than exists, but it's moving the market.
Interesting. Why do people often cite the fact that silver being an industrial metal is kind of a bad thing, as if to say that actually having utility makes it a bad thing? I mean, do you hear that as well? I'm sure you have. Like,
Yeah, I have. I mean, I do. This is maybe a corny analogy, but I haven't said it on your program. And so, if I need a personal assistant. I need someone to help with my schedule. I need someone to book the live events. I need someone to proofread my papers. I need someone that can do a lot of things. So if I put an ad out and I get someone and that person comes in and says they can do Excel and a Word doc, but they can't do graphs, they can't do accounting, they're scared to do an event and all that. So that's their resume. So I say, nice to meet you, whatever. And I come in and I get someone else, and that person can do everything I can imagine, and then it gives me three things I haven't thought of that are in the future that'll be useful to me later on. Which one is the most valuable to me? Well, obviously the second one. And that's kind of the contrast between gold and silver. I mean, gold sits there looking pretty, so it's jewelry. It's been a monetary foundation for thousands of years, but that's all it does. But silver does everything that you have in a high technological environment, from a flat screen TV to cell phone and microwave oven to membrane switches to AI to power distribution to power control. I mean, silver is that perfect personal assistant as a metaphor that could do never anything. And there's three things out there in the future that we need it for that we don't even know about right now. That's silver. So why is it less valuable than gold? From a utility aspect, it's superior to gold in many, many ways. So it's just a thought experiment. I am a silver bull. I have gold. I've always recommended both, by the way. And also my report, the Morgan Report, delves into all the resources. Just want to get that out there, shameless plug. But oh, well, I already know all the silver stocks. I really don't have that many silver stocks in the portfolio right now, but the ones I do have are kicking ass, excuse me. And three of the picks I have been M&A. Mag Silver, one of my favorites, merger and acquisition, Pan American took it over, and two more. So good stock picker, or at least above average. I'll say that, it's true. But some of our good picks are getting eaten up by bigger companies. So anyway, back to you. I'll give it back to you before I go too far off on a tangent.
No, go right ahead. The floor is yours, my friend. Looking to invest in silver or create something unique? Go to firstmint.com and use the promo code CAPC. First Mint offers premium 0.999 plus silver bars and coins, perfect for stacking or gifting. Plus, they specialize in custom minting for businesses and events. Great for celebrating milestones or promoting your brand. For quality silver and trusted service, visit firstmint.com and use promo code CAPC and make your mark today. Once again, that's firstmint.com, promo code CAPC. And while you're there, check out this great deal ongoing now. I'm looking at the mining space right now, and I mean, these miners, although many people may not realize this, they're actually they're doing better than they've done in a long time. A lot of these miners are finally have some free cash flow. Input costs are down with oil being where it is today, with the price of gold being where it is today, with the price of silver being where it is today. The margins are getting higher and higher and higher. And so my biggest worry and let me know if it's warranted or not, is that if these miners are so profitable, they're able to, have they been able to ramp up production to the point to where they can create a supply glut in the gold and silver space and then thereby bring the prices down?
No, no, mining is extremely difficult, and there are um, very big time lags for that to occur. I mean, there are exceptions to the rule. I mean, there's some gold mines out there that are probably mining at a low grade that could high grade, but they wouldn't be motivated to do that. They'd only high grade if they had the opportunity. So some mines don't have that, and that would be to sustain their profitability when the gold price is very low. So right now, you'd be more apt to mine lower grade because the margins are so high. So you might get, move more tons of rock, more tons of dirt, and get less gold per ton than, say, the previous year because the margins are high. So it's actually opposite. Now, in the base metals, there's no incentive. So 70% of the silver market is base metal mining, 35% lead and zinc, 25% comes from copper, 13% comes from gold, maybe only 20% or so actually comes from a primary silver mine. And those primary silver mines are lead, silver, zinc, silver, copper, silver, gold, silver. I mean, there's really no such thing as a silver mine other than one that's on our list that's really nothing but silver or pretty close to that. So they're not incentivized to move into a higher production rate unless the price of copper is moving up, which it is. But
Mm.
again, even if they want to mine more copper, take advantage, oh, we're finally profitable. Let's get some out there and let's feed our bottom line. Let's put some money in the treasury. Let's get this thing rolling. And I think for a copper miner, that's a much more likely scenario than a gold miner at the present day. But what they've got to do is expand, and that just doesn't happen at the press of a button. There's limits on how much they mill. There's limits on how many trucks they have. There's limits on labor. Do you want to, pay double the hourly rate and then pencil it out and say, well, if I pay my miners, 2x instead of X per hour, is that going to make our company profitable or not? No, it's not. Forget about it. So there's a lot that goes into it. I think I explained that well, but there's a lot of other businesses. I mean, you're in a dress factory. Okay, you put on a second shift, or you hire part-time workers and you start pumping out more dresses because they become the fad and everybody has got to buy it, and you're going to run it, man. Hey, look, I'm in business. This thing is hot. I'm going to go with it. Mining is a different type of business. It just doesn't work that way.
Interesting. What are the undercurrents ongoing right now that you would say that could be precipitating this move in the precious metals? People say like central banks. I mean, it's not just people, but you can also see it in the data. Central banks are buying gold, et cetera. It's kind of become a cliche by now, but you're also starting to see price movements on platinum, silver, copper. Uh, what's going on to elicit this price action?
I think for the big picture, if we go back to the situation with the Ukraine problem, when the United States basically cut off, I think it was $300 billion from Russia, that was a big mistake. I mean, you might have an ideological difference. You might have even a reason for war. I don't think there is such a thing, but that's personal opinion. But you do not mess with the money system. That's sacrosanct, no matter how bad a dispute you have. But the United States did it. Well, that was a huge wake up call to the rest of the world, which said, well, if I don't align ideologically wise with the United States, are they going to to sterilize my deposits in US dollars? And so that really was a huge mistake. So if you carry that forward, I think that's permeated a lot of thinking in other nation states that, well, why do I want to buy bonds if they could sterilize them when I can buy gold? And you've seen this further run to gold by the central banks that's occurred over the last few years and continues into 2025. and it's sort of the anti-dollar. It's a trade that is a universal, ubiquitous, everywhere, always trusted. There's no trust issue on the issuer. There's no worry about geopolitical whatever because gold is gold and every nation state will accept it. And so I think that is the main underlying process or thinking, whether it's conscious or subconscious, that really was the US shooting themselves in the foot. And it will continue. So now, with that base, you go on from that, what else has occurred? Well, uncertainty in the whole system continues to grow. And when I say uncertainty system, I'm not talking monetary, which is true, but more importantly, the whole political class on a global basis is being less and less trusted all the time. So it's not just the United States that's saying, what's really going on here? You know, we get these candidates and they lie to our face. They continually, swap around what they're going to do. They're totally inconsistent. And then there's this candidate that, let's say, was more favored, that they were more truthful than the average. And that's turned out to blow up. So, and that's not just the US. I mean, again, it's worldwide. And so the people, whatever nation state, whatever nationality, whatever political system they're under, are fed up. They're like, I'm done. I just want to be, do my thing, do my job, feed my family, love my family, and be left alone. But they're meddling with my work and all this stuff. So the political demise of the worldwide system is really starting to rot away further. And that usually is based on trust. And the monetary system is based on trust. So as you lose trust in the political structure, continue to lose trust in the monetary structure, and you go into what you do trust. Gold and silver have been trusted forever. Now, crypto has a huge trust basis as well, but it doesn't have the track record. And it also has, let's say, more issues regarding a fledgling industry, even though it's been around more than a decade. It's still a fledgling industry. It's still beginning. It's a newborn bird that's just coming out of the egg and it's trying to get its wings. A lot of failures, meme coins and, all these things that are the NFT thing, which is kind of a fad. I mean, there are uses for the NFT. I don't want to digress too much. So I'll just sum it up by saying this. The more we get an unraveling of the status quo and the more it accelerates, and it is, the more push into, I've got to look after myself, my family. And the best way I can do that is 1, 2, 3, fill in the blanks, store food, get a second job, cut back on expensive, buy some silver, whatever.
Is any country or like sovereign state or institution, does anyone benefit from a higher silver price, from a higher gold price? Is there an incentive for someone to increase the prices on the metals?
Well, outside of the industry, really not. Although I would say that perhaps there could be political leverage if someone did do that. For example, the Swiss were pretty much the last to have a tie to gold, and their currency was stronger than any other currency because of that tie. And so, for political clout, you could do it, and I think it could and probably would separate you from the pack, and then you would have distortions in the market because the money goes where it's treated best. So you could have a big inflow. But I wouldn't say, off the top of my head, and I'd like you to ask this question to others because there are many in my field that are very deep and wise, good thinkers. But I just think that, my take has been the same for years. And that's basically the system is run by an Anglo American empire and it's based on the monetary system. And the bankers don't care what your ideology is. You can be fascist, communist, democratic, constitutional republic, or a kumquat situation. They don't care. As long as they control the money, they don't care what your ideology is. So I still have that perspective. So what it benefits at the higher gold price, if they own most of the gold, it benefits them. So if they put out a crypto that's unbacked with modern money theory and they just print with no backing, then that doesn't work. All right, step two, we'll tie it to gold because we have the gold anyway. So they're right now, from my perspective, in a kind of a no-lose situation. They can float their dream of having MMT and everybody getting in line for the new system, get a new wallet, put it on your phone. Cash just kind of disappears over time. And okay, and then again, I'll repeat myself, it doesn't work. It fails. There's not enough adoption, or there's a glitch in the computer software or whatever, you know. And so, all right, step two, we'll tie it to gold. Every Amero or every worldo, the world coin, is worth, 0.0001 gram, 1 grain of gold, there you go. So unfortunately, and I've thought about this for a long time, can we win? And that's kind of what my documentary is about, is, the power and control and stress that money causes almost everyone. And it's because of the way it's used as a control mechanism. But if we had the money, let's say gold and silver were money and nothing else was, and the people had the majority of it, then that would be power for the people rather than the banks having the majority of it, which is power for the banks.
Yeah. Yeah. Well, there's something called the Lindy effect. You may be aware of this, and it basically states that the longer something has been around, the longer a concept has been around, the more likely it is to continue being around. And gold and silver have been around for millennia. So I can't think of a better way to close things off here. I know you've got something else you'd like to drop here, Dave, before we wrap up here. So the floor is yours.
All right. What I wanted to do, Danny, is just close out and thank you for doing that. How I closed out my speech at the Money Show, it only take about 3 minutes, and I only written out my speeches in these 25 years, I think 3 times. One time was in Vancouver, and I had to because there were so many details. I just had to get it on paper. Probably the worst received speech I've done, but I work hard and I wanted to get that information out. Another one I did at the Silver Summit many years ago, and I started to read it, and I could just get the feedback from the audience, and the energy wasn't there. So I just threw it on the floor and I just started talking. So that one lasted maybe 5 minutes out of my half hour, whatever it was. This one was just the ending that I read, but it goes like this. Let me leave you with this thought. In the past, silver was often called the poor man's gold, but that label no longer fits. Not in an age where silver is powering solar panels, driving electric vehicles, enabling AI infrastructure, and playing a quiet yet critical role in the most advanced technologies humanity has ever created. Silver is no longer just a precious metal, it is a strategic resource. Gold, by contrast, remains almost entirely monetary. It's valuable, yes. And if all the gold vanished tomorrow, the world's economy would continue. But if silver disappeared, our energy systems would stall, electronics would fail, and the global push toward clean tech would collapse. In short, we can live without gold, but we cannot function without silver. And yet, silver trades at a massive discount, not only to gold, but to reality. The gold silver ratio, hovering around above 80 to 1, is historically out of alignment. A reversion to even half that, say 40 to 1, would imply the silver price doubling from here. And that's if gold holds steady. And if we see a renewed monetary panic, institutional inflows, or a breakdown in the paper silver market, the $100 level could be achieved easily. This isn't fantasy, it's mathematics, geology, It's geopolitical reality. The setup is in place. So what do? First, educate yourself. Understand not just the price action, but the underlying dynamics, the demand drivers, the supply constraints, the monetary backdrop. Don't be fooled by mainstream dismissals or manipulated narratives. Second, own physical silver. No paper promises, no synthetic exposure, the real thing in your hands or trusted vaults. Because in a system built on trust, and that's cracking, tangibility is power. Lastly, if you're serious about navigating this next chapter, consider a membership at the Morgan Report, where we dig deeper than the headlines. We identify which miners and royalty companies offer the greatest leverage and the ones that will multiply, not just move when silver reawakens. And we do it with honesty, integrity, and a long-term view.
Excellent. Well, Dave, thank you so much for coming on, my friend. We will put a link down to the Morgan Report in the description box, so be sure to check it out, guys. Guys, if you enjoyed this podcast, drop us a like, comment, go Dave, go in the comment section. If you disagreed with anything, that's fine too, but let me know why you disagreed, what you disagreed on. I do, in fact, read the comments. So drop me your thoughts down below and subscribe to the channel so you don't miss another episode. And liking, subscribing, commenting, all that goes a long way in helping push this video and this channel and the algorithm. So if you'd like this message to get out to as many people as possible, a little bit certainly goes a long way. And then finally, check us out on Substack. It's capitalcosm.substack.com for all of our videos, uncensored, ad-free, and early for the YouTube audience. So with that said, thank you guys for watching. Dave, thank you for coming on, and I will catch y'all later.